Ladies and gentlemen, welcome back to the number one most valuable real estate community in existence. Today we've got on Patrick and Steve. We're going to be breaking down the short sales, more deals that investors are overlooking. I'm excited for this one. I have a little bit of a inclination that I think because of the daylight savings, I had the event posted for 6 p.m. Eastern, but on my side, I have listed it for 7. So in where I'm at, they don't observe daylight savings. So we'll probably see some people trickle in as we get started. But how are you all doing today?
Good, I'm good.
I'm doing fantastic.
Fantastic, fantastic. Okay. Well, what are we going to learn about today? I know that we're going to be talking about the short sales, and for people that are joining us now, we definitely want to invite everybody to come join us on the Discord if you haven't already at discord.gg/REIRev. But let's kick it off. Let's talk about some short sales. Let's talk about some opportunities that people are throwing away or overlooking in their CRMs right now, and
Yep.
how we can identify these people's situations, and then of course how to solve them.
All right.
Steve, you want to kick us off?
Yeah, I'll kick us off. So, all right, short sales. So most people really think short sales disappeared in the 2000 after the 2008 crash, right? Said, "Oh, they're gone." Well, the reality is they never went away. So, during post 2008, we had, you know, increases, appreciation of house values, and everybody said, "Oh, they're gone." You go talk to all the banks. I mean, I talk to the executives all the time. Oh, there's no short sales. There's no short sales. Short sales are alive and well, I tell you. It's not at the volume it was 15, 16, 17 years ago, but they're still there. The reason that they're starting to gain now for a few reasons. Number one, with the higher interest rate market that we've had has created some of the short sales. Number two, had a decline in the value for properties that were purchased at the height of COVID. If you remember during COVID, 2000, 2001, sorry, 2020, 2021, we had people going crazy buying houses, right? They weren't even hitting the market and they were at top value. Most of those values are now down, right? 4 or 5 years later, people are now getting to the same situation they got back in 08 and 09, which is, well, I owe more on my mortgage than the property is worth. Why should I pay this? That's really the definition of a short sale. And we'll talk about that in a minute.
Yep.
The other thing we've come up with investors, right, over leveraging. That's been an issue that have created short sales and just general life events, right? Post COVID, divorce, job loss, people just not being able to recover. So from that standpoint, we're starting to see short sales really start increasing.
Yep.
Patrick, why don't you talk about what a short sale is?
Well, and before we get there, a couple of things too that's important for everybody to know is historically, year over year over year, regardless of what's happening in the real estate or the mortgage market, 2% of all loans go into default, no matter what. It's just the natural course of events. And what ends up happening is the ones that go into default typically happen within the first 4 years of the loan origination. So if you think about that, for many home buyers, traditional home buyers that come in, they buy with FHA, VA, or even conventional financing with very low down payments, otherwise known as high loan to value mortgages. If they have to sell their property within that first 4 years and they purchase with a 97% loan, you add on the real estate commissions, potential depreciation in value of the property, and every one of those is a potential short sale. So short sales, to Steve's point, have been around forever. In fact, when I got in the real estate business right after the savings and loan crisis, short sales were a thing, but you never heard about them. In fact, they've been going on in commercial real estate forever. So what is a short sale? Well, there's a lot of definitions for it. In its simplest context, a short sale is a situation where a property has more liens against it than the property is worth. But that can be defined in a number of different ways, guys. So it could be you've got a house that's worth 300,000. It has a first mortgage of 320,000. That's a short sale. Now, why would it be upside down like that in today's market? Well, Steve, you just hit it. Right after the big burst of post-COVID buying with low interest rates and property escalations hitting their peak at around 2021, those people that bought then and then went into default 2 years later are exactly that first definition. Their mortgage is worth more than the house's value. Other definitions of short sales, though, you might have a first mortgage that is below the value of the home. But during your home ownership time, you decided, you know what, I want to do some renovation. So let me get a home equity line of credit or a HELOC, or let me take some money out to send the kids to college. Or, you know what, I read a book about financing my own car purchase. So let me pull out some equity and do that. Well, in that case, the first mortgage is not short, but if they have to sell the property, the second mortgage will need to be shorted, therefore a short sale. Third example could be a property that has a first or a second mortgage that are also full payoffs, but there are other liens on the property. UCC liens for solar panels or swimming pools, you name it. Any of these things that takes the overall payoff above the value of the home creates a short sale scenario. So today we're seeing that number grow, and we're going to talk about that a little bit because of other economic situations that are occurring that represent an opportunity for you and us in this space. So break it down real simple. The property value is lower than the amount encumbered. And if the homeowner, also known as the borrower in lending terms, can't come to the closing table with cash, you're going to need to do a short sale. So this is not forgiveness out of kindness by the banks. They've just learned specifically over the course of the last three major financial crises that they're far better off doing these transactions than other resolution strategies. So let's move on to the next piece of the puzzle, Steve. Why would a lender take less than is owed on the property? Can't they just demand that they get paid in full?
So yes, they could, but it really comes down to the economic value of the deal, right? The servicers, the banks, right, the lenders, what they're looking for is the best execution. So when you look at the fact that you've got a foreclosure, what's a foreclosure, right? They've got to spend legal fees. It takes time. As it takes time, you got to understand that taxes are accruing, insurance is accruing, right? These are things that the homeowner, the borrower, they're not paying. That means the bank is advancing that money, and they're not advancing it out of their bank account. They're borrowing that money, which has an interest accrual against it to pay. And it's not just one account, it's right default rates at 4%. You're talking about hundreds of thousands of properties in some cases that this could be going on. So they're advancing a lot of money to pay for legal fees, insurance. They have property preservation, right? They have to cut the grass or, get the snow out of the way or cut the bushes or whatever the case is. So this property is deteriorating, not just exterior, but also interior. And then on top of it, they don't know what's going to happen with the REO, right? Once they take it back, they don't know what's going to happen, right? Does the market crash? Does the neighborhood go down? Are there other issues going on in that, right? Look what happens if you have hurricane season, right? Maybe the property stays okay, but the rest of the neighborhood, right? There's so many different issues of why they look at short sales. It really comes down to, does the short sale outcome, is it better than a foreclosure for the servicer? And they'll consider it. And there's a process to this. And the reason that they would consider it is it's just a matter of they're losing either way, right? What we tell every agent, every buyer, every servicer, every bank is, well, I've got it listed and I'm selling it. What are you going to do any different if you foreclose on it tomorrow? Well, guess what they're going to do? They're going to foreclose, take the deed back, and go list it just like we did. So market value is market value, and that is the key to short sales. We could prove the market value. They're going to go look and figure out, oh yeah, I can get this going.
Valid point. And Steve, I think you hit on the most important factor. And as we're talking about this today for real estate investors, not all short sales are created equal. Some of them can be tremendous investment opportunities. Others are not great investment opportunities at all. But what if there was a way that you could take all of the deals that you have in your prospective pipeline that you identify as a short sale and identify up front if this one could be a potential home run, or if I can monetize in some way to cover the cost of acquisition. So we did some math earlier today with some investors, and Juan Nicasio, who couldn't join us today, he had another engagement, basically said, when we're looking at some of these deals, if we could carve out $6,000, $5,000 per transaction for an investor who otherwise would have passed on this file. And they did that once a month. That's $72,000 a year in revenue. And Juan was saying, as a savvy investor, he goes, I could either take that and offset my marketing costs so that my overhead is reduced, therefore my net gains every year are higher, or I could double down because now that's kind of house money. And what if I reinvested those dollars back into my marketing? And in his numbers and the people that he coaches, he says basically every $5,000 that he invests in marketing to source deals net him on the back end 15 to 20,000. So now you're really parlaying these opportunities. So what we want to really address today is how do we as investors identify the opportunities that make sense and which ones should we pass on? And is there middle ground that we can put some additional money into our pocket? So let's take it to the next level. Steve, we're going to talk about some common myths in short sales. You want to take the first one?
Yeah, this is important, I think, for everybody to understand because everybody has some huge misconceptions about what a short sale is, how it works, and all that. So we're going to talk about it. So myth number one, people say short sales destroy your credit far worse than foreclosure. The truth is the exact opposite, actually. So a short sale is often less damaging than a foreclosure. It's just going to depend on the situation, but in most cases, a short sale does not hit the credit as much as foreclosure. As a ancillary piece to this, which I want to talk about, is the backside of the deal, which is a lot of people say, well, it creates a deficiency and I'm going to owe the deficiency. Could be correct in some short sales. Most of the time, deficiencies are waived, but it could happen. And guess what? If it's going to be pursued, the deficiency, right? So again, what a deficiency is, let me explain that real quick. If I owe $300,000 and I sell the property for $250,000, there's a $50,000 deficit, right? So if there's a $50,000 deficit, that's the deficiency because I technically borrowed that money and I still owe that money, but the bank is just letting it go for less. Because it's letting it go for less, that's what the deficiency is. In some states, you're allowed to collect on that deficiency. In some states, you're not allowed to. But either way, doesn't matter if it's a foreclosure, doesn't matter if it's a short sale. That deficiency is going to be there because the market value is the market value. So all things equal, right? A foreclosure and a short sale both created deficiency. They both created forgiveness of debt. There's no difference between the accounting IRS piece of it. Only difference, which is well, there are a couple major ones, but one of the differences is that short sale does not hit your credit as hard as foreclosure. The big thing for somebody who wants to get back in the market.
Yeah, especially when talking to home sellers. So as you're sourcing deals, they may just throw their hands up. And by the way, it's not just the homeowner. We've dealt with this with attorneys. No offense to attorneys. We love them. But many homeowners, especially in the bankruptcy space that we dealt with, they said, well, my attorney said, just let the bank take the property back. It's the same as a bankruptcy or it's the same as a short sale. And the fact of the matter is they're getting bad advice. The second myth that we want to talk about, which is vitally important in the context of this conversation, is the bank will never approve a discount. If they're owed $600,000 and the property is only worth $400,000, there's no way they're going to take a discount off that $600,000. Well, the reality is that is not true. The banks, as crazy as they may be sometimes, do have a few things that they're smart about. One is they pay attention to what today's market value is. So you could have two homes side by side in the same neighborhood, one of them with a $600,000 mortgage, one with a $400,000 mortgage. And if both homes are only worth $350,000, the bank is looking at the $350,000. They don't care about what's owed. They would love to have seen it, but they know for a fact it's not going to come back to them, especially if the homeowner is going into default. So the banks get very strategic about, as Steve mentioned, what is the best recovery I can get? And in fact, using numbers, even in bankruptcy, where the trustee gets a piece of the action, the banks generally make out 28% better selling short, even with a trustee carve out, than they do going through a foreclosure. So that's a big number that they're analyzing. And over tens of thousands of properties, we're talking billions of dollars. The fact of the matter is that the banks do approve short sales. We've been in the business ourselves. We didn't introduce ourselves, but Asset Resolution Advisors. Steve and I have been in this business a long time under a couple different brands of companies that we've owned and had to throttle back during COVID-19. We came back bigger and stronger with Asset Res, but the banks will always look to negotiate. Now, we're going to talk about some reasons why investors should look at this. So I'm not going to steal the thunder on that piece, but one of the big opportunities, and as an investor, not every house is a great investment deal, right? Some of them sellers won't sell at a discount. They don't need to, not a great deal. The properties that have deferred maintenance, that have major issues with their structure, can be some tremendous short sale opportunities. Again, the bank is looking at the as is value. And so it's up to us collectively to make sure that the bank understands what that condition is. We've had homes that had mold issues that the agent that did the BPO had no clue about, never identified them. Fortunately, we had intel about that mold and could share that with the agent doing the valuation. Even appraisers sometimes get the values wrong. So it's important for all of us to note that we have a vested interest in getting that number right from the get go. Other things that will kill a deal, that make people think the bank won't accept a discount, is that they didn't get a complete short sale package. Now, banks are very guideline driven. They've got their checklists, they've got all their little things that they've got to comply with. And if they don't have every single document that they require specifically, they're not going to accept that deal. So it wasn't the discount, it was the documents in those cases. And then last but not least, the buyer has to be a credible buyer. I'm not going to mention any names, but there's a young lady who apparently is going to jail for doing a lot of short sales and having fake buyers come in to initiate the process. No bueno. You can't do that. You must comply with the law and with guidelines to get these deals done, but there's still gold in them, our hills, folks. So that's another big thing that we're going to talk about tonight. Steve, what's the third myth?
All right. Myth number 3, this is really easy, very simple. A lot of people say, oh, you have to be behind on payments in order to get a short sale. That is not always a requirement. It does help create a hardship, right? It does help get approval, but property value is the property value. And so the most important thing that everybody should understand here when you're talking with sellers and trying to walk them through this is they can continue to keep paying their mortgage, and they still can go through a short sale if they want to sell the house and it's worth less than what they owe. That is still a possibility.
They just have to be able to demonstrate a hardship. And sometimes not making your payments is a good hardship.
Or not having a job.
Yeah, that's a good one too. So myth number 4, and I'm sure we've all heard this, short sales take forever. How many people have heard that one? Yeah. Well, they can. Let's be honest about that. They can take forever, but in most cases, that forever can be compressed to a realistic timeline. We like to brag about our processes between 8 and 10 weeks to get the approval. In some cases, even a closing by that time is not unrealistic at all. But in order to hit those timelines, it's absolutely vital that the property file be structured and stacked correct from the very beginning. Submitting documents piecemeal is one of the biggest mistakes that can be made. You've got to submit it all in one chunk. They don't keep a ledger going, oh, we got this one, let's wait for the next one. If they don't have a full package, that file goes off into limbo and sits there until they do. So what we hear all the time, I started the short sale back on January 1st. It's now March 31st, and they say they don't even have the file. Fact is, they don't. They may have 99% of it, but until they have 100% of it, they do not press the button. So it's absolutely incredibly important. Experienced companies like Asset Resolution Advisors can really shave a lot of time off these deals, which bodes well for everybody. Buyers get tired of waiting. Listing agents get tired of no news. Investors, if you're the buyer, can't stand it because you got money tied up in some cases and you want to be able to turn your money. You want to flip those dollars every couple of months, every 6 months or so. So compressing time is very key. So that's another big myth that they take forever. Some actually can take forever, but what's good is to know that up front. If that's a good enough deal and you've got the chops to wait it out, then those can be opportunities too. Steve, what's the 5th and final myth on these?
We alluded to it, and most people think, oh, these are shady, they're borderline illegal. Hey, I heard somebody, got indicted for fraud. yes, those things have all been true, but that is not true of short sales. Short sales are 100% legal. They're a regulated transaction. I have personally been working on short sales on both sides of the coin with as a servicer and now on the real estate side for over 25 years. I've been doing short sales for 25 years. They're not illegal at all whatsoever. But you do have to do them the correct way, and the risk basically comes with the way people structure deals or they try to manipulate deals, and that doesn't fly. And those are the things that you need to stay away from. A short sale is a short sale, and if you the most important thing, especially for real estate investors, you have to understand the box they fit in, right? You have to understand where they're at. I think, John, you said it earlier, like these are dead deals that are already in your database. These are deals that are sitting there that you're doing nothing with. And if you can figure out what to do with them, you could turn these now into profit. And that's how this game is played, is understanding how that fits so that you can now move forward with them and they're no longer dead deals. So it's really important to structure the short sale properly and have legal buyers.
Yep. All right. Questions at this point?
Yeah, I'd love to open it up to get specific about what exactly the bank is going to be looking for, on that file.
Yep.
Yeah,
All right, so
yes.
we've discussed, what a short sale is. Now let's talk about some of the mechanics behind that. So to answer your question, what are they looking for? Let's talk a little bit about documentation. So Steve will insert this here into this segment, but in order to do a short sale, the bank is going to need certain things from the borrower, and it can come in a variety of ways, which is why we do what we do, is to minimize the guesswork. But they're going to need a hardship authorization. Usually, there's a form that they have. It can be as simple as I lost my job and I can't make my payment. So the hardship is piece number one. Oh, by the way, John, we do have a very cool short sale checklist and a how-to guide. We normally sell. We'd like to make that available to your members if they're interested in that as being part of this particular live stream.
Thank you. Thank you. Thank you.
Yeah. And so that's going to cover a lot of what we're talking about here. So hardship affidavit. If there's anybody that's going to be negotiating the short sale, whether it's you as the investor, us as a third party company, a real estate broker, a mortgage person, they're going to need a third party authorization. Now, that's a letter that's signed by the homeowner or homeowners, depending on how many there are, saying, I'm authorizing these people to talk on my behalf. There will need to be, in many cases, financial information. They're going to, in a form called the RMA, or Request for Mortgage Assistance, they'll ask, what is your gross income? What are your expenses? And those kinds of things. And if it's a bankruptcy, that all is included in those documents as well. And then the actual short sale application itself, which has all the basic, front end information, in addition to a fully executed listing agreement. All short sales, with the exception of reverse mortgage short sales, must be listed on the multiple listing service. There needs to then be a fully executed contract. Let me back up: a MLS sheet showing current and active days on market, a fully executed contract, and all necessary addendums. And then at that point, you've got the package virtually complete. We also include in ours a title commitment. We do title on these properties, so we can submit that along with the package. And therefore, you have a completed package to send off to the lender. And Steve, did I miss anything in that list?
Proof of funds.
Proof of funds. And a proof of funds, thank you, for the buyer on the contract. And if they are an entity, which is a big deal right now with all of this new stuff on the FinCEN stuff. If they're an entity, they also want to see the articles of incorporation and an operating agreement in most cases, so that they can verify that the members of the buying entity are not related to the home buyer, which I think brings up one other piece we need to talk about. These short sales need to be an arm's length transaction, right? So you can't be the wife of the debtor, usually not a direct relative like a brother, father, son, or anything like that. So that's what's required to submit one of these things. John, would your team like to hear about some of the opportunities that they as investors can yield from these things? And to structure, as Steve pointed out, if I've got a database or a pipeline full of potential deals, some of them might be very big rips. I might be able to get a lot of money out of these. Other ones might have just a nominal revenue, but if I can get the nominal revenue with minimal work, is it worth it to me? And we'd like to go through that process with everybody.
Absolutely. Yes, please.
All
right. Steve, fire away.
Okay, so first, there's some really, really basic ones that I think people miss, right? So when we're talking out to this group, there are a lot of different types of real estate investors, right? There are people who do wholesaling, people who do wholesale and innovations only. There are those who do fix and flips only. There's some who do a smattering of each of them. There's some people who actually use the Burr method, right? Which is they're going to buy, repair, and then rent it out. There are people who they're actually properties you can just rent out. All of these are really, really good strategies if you work, not do wholesale in a second, we'll talk about it, but if you do rentals or you do fix and flips or you purchase and fix some of the properties and then rent them, right? So it fits all in. These are really good properties to work on. Why? Because you're basically buying below market. So in a short sale, there's no magic coin of saying, "Hey, I've got a $200,000 property and I'm going to buy it for 150." Doesn't happen. What you are going to do though, is you're going to take a $200,000 property and can you buy it for 195? Maybe. Can you buy it for 190? Maybe. That's where you build your margins in, right? Those are some of the profits you can build in because you're getting the property with the strategy of I'm going to go fix it and flip it and the ARV is whatever, or I'm going to rent it out and my rental is whatever. So that's one area that if that's where you work in and that's one of the strategies you work in, then short sales, you shouldn't be afraid of them. Those are some of the stuff you should be going after.
Yep. And to add to Steve's point as well, that same example, it's 200,000, can I get it for 190? Well, what if that, and then you're going to renovate it. Well, what if that house is in really bad shape? Could you get it for 150 or 140? The answer is absolutely yes, if the as is value is warranted by the amount of repair. So if it needs a new roof, if it's got trees growing out of the foundation, those are all things that the bank absolutely will consider, because if it goes to REO, they're going to have to make those repairs themselves. And that's not something they prefer to do.
And we've dealt with properties that have ARVs in the $400,000 or $500,000 mark, and we're negotiating the sales at 200. So I mean, they're big margins. Yeah, some of them need to be fixed, but there's some big margins, right? I've worked on one property where it's just a tear down, but the piece of land where it's at and located is huge, right? Some builder's gonna put $1.5 to $2 million property on there, and they're buying this property at $500,000.
Yep.
So there are opportunities in this. You just have to be creative.
Yep. So then the second opportunity is for the wholesalers or the novation folks. So what's interesting, I mean, we're hearing a lot of stuff about wholesaling, right? It's getting its own wounds that it's dealing with. But in terms of short sales, the traditional wholesale model won't fly. And that's not all bad news. But basically, as Steve mentioned, the buyer of the short sale property must close on it. So there's generally not enough margin on the front end of the deal to do a wholesale where you can put some money in your pocket. Not always the case, but in the traditional sense of the wholesale, that's where it's done. So in this particular model, we need to start thinking about the back end. And that previous example that Steve used on the fix and flip is one methodology for this. So find a property, put it under contract, and depending on how you structure that deal to finance it with hard money or whatever, you can, if there are no deed restrictions, flip that property the next day. And that's something that we help with as well, as we analyze these transactions up front before anybody makes any financial decisions. We can let you know about those things. Does the lender have deed restrictions where you can't sell it for 90 or 120 days? That would be a big deal in this particular model. So there's one piece of the puzzle. You can get paid on the back end of the B to C, or the A to B, B to C transaction. So that's one way. Number two is something that we deal a lot with in our bankruptcy business, which is a buyer's premium. Now, what is a buyer's premium? Well, if you've ever looked at auction.com, for example, all of the properties that they sell have a 5% buyer's premium. And that's how they make their money. It typically goes to auction.com. Well, we utilize that exact same methodology through the bankruptcy process, where the trustees that we worked with on a bankruptcy short sale said, look, I need to get more money. The bank's 5% carve out that they're willing to pay me isn't quite enough to satisfy the estate. I need a few more percent. So in those deals, we structured it with a buyer's premium, defined very simply as The person that's buying the property, and let me frame this. You found a property that you'd like to purchase, or let me frame it differently. You found a property that you would have purchased, but there's no margin in it. We're going to structure the deal where it's listed with a local real estate agent. We'll add a buyer's premium to that. Let's call it 2% as an example. It's arbitrary. $300,000 property with a 2% buyer's premium. Because it's not on the seller side of the transaction, the lender doesn't care what happens to that money as long as it doesn't go to the homeowner. That's the one thing it can't do. But could it go to you as the investor? And the answer is absolutely yes. The buyer is paying additional cash to get this property. So, caveat number one, it needs to be in a market that would support that, right? So if you're in a full VA market where nobody has any cash, a buyer's premium would not typically fly because it's cash out of pocket. But if it's a hot property in a good marketplace, we see them all the time. So now, as the investor at closing of that first transaction, you can put that $6,000 in your pocket. And it's not a bad payday for not having to have been involved in the purchase of the property, buying a deed, or any of those other expenses. So that's another way you can quasi wholesale or novate the transaction. Steve, did you want to add to that?
Yeah, I mean, in similar or in addition to, right, and something we've actually helped work on is, if you're more on the wholesaling side and you're looking to do a short sale, how do you wholesale it? Well, the way you wholesale it is you have to partner with somebody and figure out what the exit strategy is. So one of the exit strategies might be, hey, this is really good for a fix and flipper. I'm not a fix and flipper. Let me do this. Let me go work with whoever to get the short sale done. And then I'm going to go flip it. I'm going to buy it, right? You have to buy it. That's the one provision of this. But I'm going to go get it to the fix and flipper who's going to do a double close. But they are going to then pay me an additional fee on top of it because I cleared the liens, right? I fixed up all the issues through the short sale and I got a free and clear property for them to now go do whatever they need to do. That's another way to do it. It's quasi wholesale. It's not exactly what you do, but it is a methodology to do it. And I've saw it in one deal where the wholesaler made 30 grand on the deal. And that's what they were able to do because I think they bought it at 300, they sold it at like 345 or 350, and then fix and flipper went and fixed it up and I think sold it for like 600. So there are margins like that in the deals that are probably in your databases today, and it's just a matter of being creative on the front end of the short sale.
And I'm glad you said that, Steve, because I think part of the moral to today's live stream is not that you necessarily want to go out looking for these, because if there's $6,000, it may not be enough to make your time worthwhile. But if you've got 100 files in your database, of which 95 are going to go in the trash can, what if 10 or 20 of them could put $6,000 in your pocket? That might be meaningful enough, especially again, if you're not having to close on the property in the buyer's premium model, you're not having to take any risk, you're not having to do any of the work. It's another source of revenue. And as we diversify ourselves in the real estate business, all revenue is good. I've always remember the saying, you can never go broke making a profit. Right? All right, Steve, what is another opportunity with these things?
Well, before John, any questions that come up to mind, and want to hit
None.
these live as we can.
Yeah, I'd love for the chat. If you all have any questions throughout the stream, there are a couple people that are saying that they are trying to hear. Definitely try to reconnect and make sure you're not deafened so that you can hear this. And I also dropped the link to the YouTube, so if you can't hear on the Discord, tap in on the YouTube live stream. But no, I think everything is pretty straightforward so far. Definitely want to, of course, encourage everybody. If anybody in the chat has any questions, we can answer those. Paul has a good question about reverse mortgage short sales.
Get that question quite a bit, and the answer is yes. You could do a short sale on reverse mortgages. They have a very standard process. The one most important thing, a lot of people get confused on this, is the seller has to be either the homeowner or heir of the homeowner. So there's some I know that there's some people who buy deeds and go through that process and then try to do something with the exit strategy. Cannot do that on a reverse mortgage. They require the seller to be the homeowner or an heir. So if they have not gone through probate yet, they will need to go through probate in order to get to the reverse mortgage. Other than that, as Patrick said earlier, reverse mortgages are actually pretty easy to do a short sale because you don't even need to list the property. So it's a really, really good investor property to buy and or sell or be a part of, because you don't have to put on the MLS. You're not going to have a lot of competition, right? It's just a matter of getting to that seller, getting them to agree to do it, or the heirs of the seller, getting them to agree to do it. And then you just process it like you would a standard short sale to some degree. And you just need a listing. You do need a listing agreement. You do need an offer. And there are a few other things you need to get done to process it with the bank. But other than that, it's a pretty clean process.
I wanted to touch on a couple things. I see there's a question about timing as well. So I'm going to, if you don't mind, John, I'm going to answer two questions. One of them is asking about before the auction date, how much time do you have? We're going to hit that one in a second. But the other piece is the listing of the short sale. Now, what happens if you find a deal and we analyze it for you and it's like, you know what, there's actually some spread in this thing. It would make a great deal. But you have to list it on the MLS because it's not a reverse mortgage. Well, just to give you some standard timelines, FHA HUD properties, HUD loans that go into short sale must be listed on the MLS for 15 days. Now, if you think about it, if you've got a really good deal and it's listed for 15 days, there's a possibility that you may get outbid by some competitors. Now, there are strategies. You could overprice the listing and all that good stuff, but that's one piece. Most of the other lenders and servicers only require a full weekend cycle, meaning if you list the property on a Friday, live on MLS, offers can be accepted on a Monday. So for many of the investors that we work with that find these deals, we leverage that guideline, stay within the non-gray area, but say very specifically, let's get this thing listed on MLS 5 p.m. or 4:49 p.m. on a Friday, and we'll work on the offer over the weekend, and we'll get it executed Monday morning so that it meets the guidelines, but you minimize the chance of other investors coming in to bid on the property. In some cases, it's difficult to show those properties over the weekend too. So it makes it even better for the original investor. So, there's strategies that you can stick to that can be very tight. As Steve mentioned on the reverse mortgage, you don't even have to put it on MLS. You don't run that risk. Timeline number 2, sale date. By guidelines, every lender essentially follows the same thing, which was actually put out by the Consumer Finance Protection Bureau, aka the CFPB, that stipulated if there was a foreclosure auction date 37 days from the receipt of a full short sale package, the lender is not required to consider it, to review it, to do anything. Outside of 37 days, they are obligated to do so. Now, when we talk in terms of the business, we usually tell folks like yourselves and or real estate agents more like 60 days, because if you don't, what 37 days has to have is that thing we talked about earlier, full package, all of the documents, all of the authorizations, proof of funds, fully executed contract in their hands and confirmed received outside of 37 days. So that's about the time frame that you're looking at. There are ways to deal with that as well, which is fodder for another live stream, but bankruptcy is a vehicle that homeowners can use to hold off the foreclosure. Sometimes we can have the homeowner call the bank themselves and say, hey, I'm working on a deal. Can you postpone it? And sometimes the bank might do that. But those are your time frames that we're looking at. All right.
So
moving right.
Yeah, so let's go over the third opportunity, and this is a big one for everybody. So I want everybody to really make sure you pay attention, because you could probably start doing this today, and you can start figuring out ways to monetize for yourself today. So first of all, getting into short sales will give you access to a lot of foreclosure and pre-foreclosure properties if you know where to look and what to look for. A lot of sellers don't want to list the property because it's a short sale, right? They feel they can't sell, they're not allowed to sell, they don't know how to sell, and you probably have it in your data of looking. When you look at your data, it's real simple. How much is owed on the mortgage? How much is the current as is value. If it's a negative, most of you probably walk away from that. That's a short sale. Right there is a short sale, and that can be processed and you can work on it if the rest of the buy box fits what you're looking for. Fix and flip, rentals, tear down, whatever the case is, and it fits, don't let that detract you from it. That's one. Number two, a lot of sellers, a lot of agents list the property way too high and they get zero offers because the property is not worth what they have it listed for. I'm telling you right now, those are all short sales, and the agent or the homeowner don't know about short sales and don't know how to sell short sales and don't know what to do with short sales. That's a great in for you because they're in distress, right? It's a distressed asset. They don't know what to do. They don't know where to go. They're trying to figure out how to exit, and their agent said, "Hey, list this $500,000 property for 540. Maybe you'll get lucky. Hey, and if you don't, you'll go to foreclosure. To foreclosure, you're no worse off." That is not true, right? So again, if it's in your buy box and you're out there looking at MLS right now today, you will see any property that's 120, 150 days on the market. Those are probably short sales, hidden short sales that nobody's talking to anybody about. Those are really good targets.
Yeah, and Steve, I think it's important to note as well to understand what to say to these folks. I mean, if you're talking to the real estate agent that has the listing, kind of query them, find out what their strategy for listing the property at that price was. And if they say, well, we need to list it to cover all the costs, that opens the door for conversation to discuss the potential of a short sale. For the agent, they still get paid a commission on it. So technically, it shouldn't really matter to them. Then it's the homeowner that needs to have the conversation. As we've discussed, they may need to have a reality check. They'd like to put some money in their pocket. Well, like and reality don't often match. So those conversations become really serious. And to the extent that, the more time that goes on, if it's been on the market for 120, 150, 180 days, are they current on their loan? Are they struggling to make those mortgage payments? If they knew in advance, if they had the crystal ball that they would have to sell this property as a short sale and what the benefits of that were, would that change their mind in accepting that offer? And by the way, that's a great short sale to submit to a bank because we've got history of the MLS for 3-4 months. That's big data for them to understand that this deal may not go down the way they want it to either.
And the last one, which John, we'll talk about this more and how to do this, but this is for everybody, and I think it's great for your platform and what you're doing in this community, which is, if something qualifies for a short sale, right? If it's a good short sale, it's something we end up doing. We actually have a program where we pay a marketing fee back. So if we get a short sale assigned to us from somebody and we are able to close on it and finish it, then as an incentive, we pay that back. We could do something with your platform that we can come up with some type of an arrangement. So if people are looking at these, they're going out and they find these and they're trying to figure out, what do I do with it? How do I get this involved? We'll work with you in coming up with the parameters, the buy box, what we work in. And then it's something that as people come across and they're able to talk to agents, talk to homeowners, whoever, say, yeah, I need help. We get them into the platform and we can figure out how to get that done. So that's, again, something that we could get going right away.
That's an immense value. We sincerely appreciate that.
Nice. All right. So, yeah.
Yeah, I was just going to say, so kind of to wrap up before we take, questions and what we're doing, we've talked a lot about this. What are the things that that you shouldn't do, right? Number one, don't hide that this is a short sale from anybody. Short sale, it's okay. It's nothing to be ashamed of. It is what it is. Don't use fake buyers. Don't use fake proof of funds. That will get you in trouble. That's going to be a big no-no. Don't, when appraisals come out or BPOs come out, don't inflate what the repair issues are, right? They are what they are, and it's important to point them out. It's important that we value them appropriately, but it should be what they are. Don't be dishonest in the transaction. That's what's going to get people in trouble. Arm's length transactions, again, that it's required. There are other things you can do that kind of get around all this, but we'll talk about that in another session. But for the most part, the buyer cannot be related to the seller. And there's no money that can be transacted as a part of the transaction itself. You cannot give the seller anything. In some cases, the seller can get a move fee. That doesn't. A buyer's premium is completely different. That is legal in a different part of the transaction, but it has to be arm's length, right? And then the last thing, which is really important, is we've seen this a lot. Don't promise sellers, agents something you can't deliver. Don't tell them you're going to get them top value, this, that, right? Short sales are complicated, but fraud is much, much worse. And cutting those corners are going to get you in trouble.
Good point.
All
It's
right.
like Wendy's. The owner of Wendy's was asked why he makes square hamburgers. He says, because we don't cut corners.
All right. So really, I mean, from our standpoint, why we wanted to share this, and again, we go really much deeper into everything. Short sales, it's an area where knowledge is going to beat capital, right? If you know how to do this and you know how to do it right, and you've got this data. This is not us telling you go buy a bunch of data from somewhere else. You've got this data. If you can learn how your buy box fits this and how you can consistently close on these deals that everybody else misses, you're going to be that 1% better. And that's where things are going to go up for you, because you're going to start monetizing off stuff that today are dead and that you're accounting for is dead.
And Steve, can I throw something in there too? One of the things, I think we alluded to it, but in all the short sales that we process, they're not all the same at the end of the day. There are many of them, and it's a smaller percentage of the whole that we discover, oh, the mortgage has been wiped out. We talked about it on our last live stream. We found a property, investor brought us, is like, is there anything in this that I can benefit from? It's a short sale. Ended up having a $300,000 loan that had been wiped out 2 years earlier that nobody knew about, including the seller, because the seller hadn't made a payment in 10 years.
Well,
So, you go through these, and if you're monetizing a few grand on every one of them, there's going to be that one that pops up that there's 30, 40, $50,000, $300,000 that really makes up for all the other ones. And they would have gone in the garbage can anyway.
Well, our $1 million property is a great example. We had an agent go out, we did our CMA, we did our due diligence, we looked at everything, 2 mortgages on here, blah, 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 short sale, yes. We said we're going to be property was disaster. We're going to maybe get 350 for this, hopefully 325. All of a sudden we're getting offers at 500, 520, 530, right? The deal just like it morphed into something we didn't realize. That I mean, we did our due diligence and we still missed, right? I mean, we did everything we're supposed to and we still missed because we did not realize that there are builders in that area who just want the land. And that's what they were after. So the money part, it changed, right? The ARV we thought was 600 or 650. The ARV all of a sudden was 1 million, 1.5 million, 2 million, right? Changed the whole deal. Not on our side. It's still a short sale because we have 2 mortgages, right? Actually, the first mortgage is ending up being a payoff, and the second mortgage is a short sale. But from that standpoint, just you never know. So like again, there are riches in them our hills, right? There's gold there, and
In
you
the
have to
niches.
find it.
Yep. So a question just popped up. Thoughts on loss mitigation, short sales, bankruptcy, curative in California? Yeah, we do them all the time. California is
Don't
a
do
great
it.
market.
Don't do it. I'm just kidding. Yeah, we do California. It's there are actually some favorable laws that make California a good place to do it.
That's a first. I never heard that about California.
Well,
Yeah, for sure.
well, you've got to understand, when we're doing short sales, we're on the consumer side. They've got good consumer laws. So the 2 that are really good for short sales, I'll share them as well. It's not hidden, it's out there, is number 1, and this is one of the exceptions to the rules of foreclosure that we talked about earlier. So number 1 is, if you're in foreclosure, as long as you're 3 days before your foreclosure date, 3 days. If you send the listing agreement to the foreclosure trustee in California, they have to stop the foreclosure and put a pause on it for 45 days. So the cool thing about it is that they didn't specify when the property was listed, you have to do it. They said as long as it's 3 days before. So you can imagine, I have my property listed for 2 months, 3 months, 4 months, 5 months, whatever, not getting offers, can't figure this out. And I've got foreclosure 5 days from now. I can take my listing agreement, send it to the foreclosure trustee, and they have to stop the foreclosure for 45 days. Now I've bought myself 45 days to figure out where's the price, where do I need to reduce it, how do I do it? Step 2 to this, which is even cooler, is once you have an offer, and as long as it is 3 days before the foreclosure date and you send it to the foreclosure trustee, they have to postpone the foreclosure for at least 45 days. So same thing. So you could buy yourself at least 90 days without any legal intervention, plus whatever else you're doing. So there's some really good ways in California to process short sales.
Couple of the questions: can you do it in New York? Yes, we do New York as well. In fact, that's where the $300,000 Whopper was. It was in the state of New York. 116-13, whatever the address was. Q Lou has a question about bankruptcies. In Vegas, I found out the exemption limit is 605K. Would I only be able to deal with properties valued above that limit? No. Great question. Bankruptcy training. So the exemption is an issue for the bankruptcy trustee. If I'm a Chapter 7 trustee and I want to sell a property and there's an exemption in it, that's usually going to kill the deal for the trustee to sell because they're exempting that amount of money. As a consumer buyer, as a investor, as a John and Mary Smith, the home buyer, the exemption makes absolutely no difference whatsoever. It's only in the bankruptcy sale itself. What we talked about in our bankruptcy program, why this is a great question, 97% of the time, the trustee never sells the property anyway. So you can say thank you exemption because you just put 97% of these deals in my radar as a potential investor. That's a big deal. A lot of these things have equity in them too.
Good question.
Q's got some great questions. Always. We're thankful for you, brother. And he takes action too. You know, he's not just sitting around asking these questions. He's out in the field and he's really applying. So that's what it's about, you know, at the end of the day.
Yeah, for this group, the exemption actually in any state for bankruptcy, it's actually a positive because
Yeah.
it's what's keeping essentially the exemption is the amount of money that you exempt from the bankruptcy estate, from the trustee, from anybody taking. Right? So if you have, in other words, in Vegas, we'll take that. Exemption is 600,000. I own $1 million property and my mortgage is 500,000. That means I have 500,000 in equity. I'm allowed to exempt up to 600,000 that nobody can touch. Well, that 500,000 of equity, nobody can touch. They can't force me to sell my house and pay off all my creditors. Even though I have $500,000, they cannot touch it because it's exempted from the bankruptcy. Texas, Florida, they're unlimited. They cannot
Florida's
touch your
100%, right? It's homestead exemptions, 100% of your property value.
Yeah.
So yeah, that keeps the trustees at bay from selling these properties. And I can tell you, we've done thousands of bankruptcy short sales, and we saw thousands more that we said to the trustee, you really need to consider selling these. Well, the debtor exempted the property, and all it really would have taken is a conversation with the debtor. And that's when we decided to start marketing those deals to folks outside of the bankruptcy, because we knew darn well once that trustee filed the no asset distribution on that file in the public records, it was a golden opportunity to pick up for sure.
Right.
Yes, Lou, that is exactly why they do that. Good stuff.
So, I mean, I don't know if there are any other questions.
This is that opportunity, ladies and gentlemen.
This is it. I have a question for you, John, and maybe even the broader group and something we put out, like, we did this 3-part series as the end, right? Of our 3-part series, but there are a lot of deeper dives we could do within all of the items, additional training, additional things where we can really jump in on more specific areas that I think people, if they want to learn, they want to know better, how it affects their data, things like that. I mean, that would probably be something if you wanted to check out with this group. We're here. That's what we're here for.
Absolutely. I know I'd be grateful for it. Um, and I know I'm not the only one. I'm sure everybody in here would benefit from it. So let us know what you all have in mind. I think there must have been something going on with Discord tonight. I don't think a lot of people got notified, and there seems to be some issues here with people listening on Discord. But I sent that YouTube link, and we'll probably catch a lot of people on the replay. So in the event that you couldn't hear or join us on this live, hopefully you were able to catch the replay.
See, Q has another question. They found bankruptcy records for his county and they display assets and debts. Yes, that is correct. Do we have a specific preference with debt versus asset ratio? Really good question. And which thresholds okay. So which ones have the best deals? All right, here's what I'm going to tell you. Little nugget here, and this is something, if you can figure out how to find it, this is what you're looking for. Is you're basically looking for people who have properties and cannot afford them in the bankruptcy. And again, this is one of those trainings, right? We go dig in and we can go show you how to do all this and look at all this and find it and how to do the math and get really specific. But from a high level, in the bankruptcy, they have to disclose how much they make and what their expenses are. And if you go look specifically to the mortgage of how much they make, how much their income is, right? Their net income, and then how much all their mortgage, right? And it's not just mortgage, but it's like their debts, right? Their housing specific debts. That's the key, right? We don't care about the cars, we don't care about the other things. What you're looking for is, we're in the mortgage, we're in the real estate space. So can the person with their income pay their mortgage? And if you go look, over 50% of the people cannot afford their mortgage. It doesn't matter about anything else. I don't care what their cars are. I don't care how many houses they have. I don't care about any of the other things. If you just go look at that one statistic, over 50% of the people cannot afford their mortgage payment. That's what you're looking for, because that's where you can start talking to those people saying, you need to sell. You're going to lose this house, right? It's not a matter of if, it's a matter of when. You're going to lose this house. Those are the prime investor deals, because you're getting them before REO, you're getting them before the foreclosure, you're getting them before anybody's looking at it. That's what we talked about last week.
Yep.
Those are the prime deals because you are on top of it before anybody else. That's what
Yeah, and
you
just
want.
that little reminder is oftentimes these properties won't even show up in the default list, because the last thing that these homeowners in bankruptcy do is they try and hold on to that house, especially if they know the trustee's not going to sell it, and they forego everything else. But now that their credit cards have been discharged and they no longer have access to them, and their cars, if they get another car, they're gonna have to make payments on them. Then they begin to choke. So you can find these folks that are in that space long before they ultimately go into default and have that conversation with them. But again, those bankruptcy schedules show the debt to income ratio. So it's using that data and the knowledge. Even though they may smile behind that mask, they're panicking, and so finding a resolution for them, which is what asset resolution advisors can help you do, is a great way to tee up these opportunities. And contrary to short sales, where none of the properties have equity unless we find one with a missing mortgage, in the bankruptcy space, many of them have equity. But because of the exemptions, because of other reasons why trustees don't sell them, they don't liquidate the properties for the benefit of the estate. And the sad news is, many of those homeowners end up going into foreclosure anyway, even though they filed bankruptcy. So talk about the ding to your credit report, a bankruptcy and a foreclosure. That's like breaking two mirrors back to back. You get 14 years bad luck on that one.
I want to ask real quick about the process, for short sales, I know that you said one of the requirements is a letter of hardship or affidavit of hardship. Now, what if somebody is over leveraged on a property where they owe more than it's worth, but maybe they don't necessarily have financial hardship that they can't keep up with the payments? Is that still going to qualify them to have a short sale?
Yes. Yes. But if they don't have a big financial hardship, they might be required to contribute to the sale. So in other words, if take the example, you have a $300,000 prop, or you have a $300,000 owed on the loan, the property's worth 250. What the mortgage servicer is going to do is they're going to say, fine, we'll take the 250. That's what the property's worth, right? It is what it is. But they might say, hey, we're losing 50 grand. We want you to contribute 10. We want you to contribute 7. We want you to contribute 12. They might require that person to pay, but that 12 grand is, it might be far less if they just want to get out of a bad property or bad deal. It might be worth it for them. So you do have to be aware of that they could ask for a contribution, but it just depends on what it looks like.
Because I have a seller that reached out to me actually just after the last live stream that we did. So this is 2 weeks ago. He owes $1.2 million on his house. He's had the property listed. He's tried to sell on the MLS. He tried to list it for 1.7. It can't happen. I mean, the property's current condition is probably worth maybe $800,000 to a flipper, right? That's going to actually come in, buy it, and do the work to actually get it to be worth potentially 1.4 million, right? 1.6 million. In that guy's situation, he's so set on, oh, well, I need to sell it for this price so that I can pay off my other debts. I'm thinking, okay, well, let me go to him with this option, of a short sale. But I just didn't know if maybe he'd qualify or what, because it doesn't sound like he's behind on the payments, but he's definitely underwater on the property.
And he might not be behind on the payments. There are a lot of reasons, right? So like the bankruptcy is a great example. 50% of people are current on their mortgage, can't afford their mortgage. 50%. How is that possible? Right? So the reason is they're borrowing from people, right? Family, friends. They're selling assets that they have already, so they got money to keep current, right? But now they're just getting to the end of the line. My guess is if you have a property that's deteriorated down to the fact that it's not even worth whatever, he probably doesn't have enough income to keep up with all the payments and all the other debts and everything. So there might be a hardship. It's just different than what most people look at, right? A hardship is not just, oh, I don't, I lost a job, right? You can still work and have a hardship. You just might not be making enough money to cover all your costs. And that's part of what you put in a hardship application.
And that's to your point, Steve, with the looking at the debt to income ratio at the bankruptcy filings. Well, outside of bankruptcy, it's the same thing. If you're looking to get a mortgage or do a refi or whatever, your debt to income ratio for your household expenses, you're looking mid 30% of your income. Well, if in this scenario, John, the homeowner's debt to income, he's 50-60% of his income going to the housing, that is a hardship. And the lenders would absolutely see it as such because he wouldn't qualify for a loan modification in most cases under those terms.
Yeah.
Well, that's good. I'm going to, not for him, but to understand, I'll definitely reach out to him with this solution. I'll propose it to him. Hopefully, if we get a chance to run this back or if we do something here in the near future, I'd love to highlight this as success. And also, we can work together, I'm sure, on this because you all actually handle the short sale process. Correct?
Yes. So we handle the short sale process. If he doesn't have an agent, we can help assign an agent who knows how the short sale process works. If he has an agent that he wants to work with, then they'll work with that agent. We can work with that agent. So we have a pretty open, process of how we work with people. It's really the front end. What you're doing is the key to that, right? That this is the key to unlocking this, right? This is how you unlock a distressed deal.
Right.
This is how you decode it. I mean, that's what we talk about. This is exactly it.
And just because it's already sat on the market, I mean, I'm sure he's probably ticked, a couple of the boxes for the lender because, I mean, they know it's not selling. If we were to come to them with a cash offer, and it was a sincere offer, and maybe we could line up the financing, hypothetically through a partner or whatever, and we were to go back and do what we talked about on that last stream about purchasing it, closing on it with an LLC, and then selling that entity that holds the property to the end buyer. Is there an opportunity to do that where there is a sizable fee as well? Do you think that the bank would still allow to take that loss?
Yeah, so the front end piece, like I said earlier, it's all about the as is value. So if you're saying this as is value is 800,
Right.
it doesn't matter their loan's 1.2, 1.3, 1 point, it could be 3 million. It makes no difference. They're just looking and saying, I've got a distressed borrower who cannot afford to make payments or is going to be an imminent default, right? DTI of all the payments. And so we know the property's worth 800 in its condition, go sell it. We're good. If you buy it, and yes, that's a cheat code of putting it into a land trust. If you put in a land trust and sell the land trust, that's not a deed restriction, right? There's no deed restriction because you're not transferring the deed, you're transferring the ownership, the beneficial ownership of the LLC. That's a whole other legal matter, but we don't deal with that. That's on the second part. You need to make sure that that's legal in the state you're in and the transaction and what you're doing. If you then make a fee on that, there's nothing that restricts you from selling an LLC and making a fee. It's a business transaction. It's no longer a real estate transaction.
Right. My question is more so, do you think that the bank would accept even more of like a discount, right? Because obviously they're trying to get the most they can out of it, but in order for us to have a margin, I mean, they got to give us, some of that potential
Yeah,
equity.
it's going to be stuck really to market value. So, you know, things happen and we do like I was just talking about this earlier to another investor group. We have a deal that we're working on, and we did our due diligence. We looked at who the investor is, FHA. They're going to do an appraisal. We know how it works. 9 times out of 10, we think that this property is going to be probably appraised at 390, 395. We got an offer at 385. Okay, we're within the margin of error. We could do this. Great. So again, probably 395. They bought it at 385. There's a $10,000 gap. Great. Appraisal came back 347. I can't tell you why it came back at 347. I don't know what happened, but they discounted the condition of the property much more than what we did because it's in rough shape. It's in rough shape. The agent did a good job of showing the appraiser all the issues on the property and showing him, and the appraiser just took a bigger discount. And so now all of a sudden, this guy's now buying this property at 340 rather than 380.
And will the bank
So
only accept the appraised value, or will they go below that?
on that property, so the way FHA works is their appraised value. So like again, these are all the nuances, and I don't want everybody to worry about. I mean, write it down, but you don't have to worry about it. This is why you partner with a company like ours or whoever, right? Somebody who knows how to do this. So FHA has a program, and the way the program works is called the pre-foreclosure sale program, PFS. And what you do is when you put in an offer, they appraise it. Based on the appraisal, they need to net 88% of the value of the appraisal. That's it. Bottom line, finished, done. There's no negotiating that. It must be 88% of the appraised value. That's it. VA is 84.05% of the appraised value. Where they came up with that, I have no idea, but that's their value is 84.05% of the appraised value. Fannie, Freddie, they don't have any. It's free game. So it depends on who
I gotta stop you real quick. When you say Fannie and Freddie is free game, like they don't, there is no minimum for the appraised value.
It's a negotiation. So it's now they're not gonna take a huge discount. Again, they're not gonna say, hey, here's an $800,000 property, I'm gonna sell it for 600. They're not gonna do that, but they're gonna look at it and they're gonna assess it like you and me, and they're gonna say, do we really want to take this $800,000 back and spend $100,000 to fix it up just so that we can sell it for about, you know what, screw it, I'll just sell it to John. What was his offer? 775. Great. 750. Great. We're just gonna take it and run. If we put it on the market and that is the best deal we got, that is the best offer we got, they're going to probably take it and run. they don't have any guidelines that restrict them to a number. VA and FHA do. So these are all the little things and trainings we can down in the future we could
Right.
really dig into and get so that you could build your buy boxes, right? So one question a lot of people get, well, how do I know it's an FHA loan? How do I know it's a VA loan? Again, that's a whole training. So there are these stacked trainings we can do for everybody so that we can teach you all of these things so that as you go through these, you get smarter in how you build your buy boxes.
All right. Well, ladies and gentlemen, I hope that you all are excited, for the trainings. I definitely want these guys to come back and continue to share with us. And I'd hope that we'd be able to compensate them not only in working with them on the deals, but, especially for the knowledge that we're learning. I mean, this is insane. And I'm telling you, like, I know that there are people in this live right now that are sitting on leads that will convert. It's just the fact that you didn't know how to convert those leads before these lives, before these trainings, is the difference, right? You may have marked them dead, but because now you have this information, you can go revisit these people with a solution to their problem. So I just want to extend my sincere gratitude to both of you, Steve and Patrick. You have really revolutionized this community, and I know that everybody in here is sincerely grateful.
And we are too. We appreciate everybody's interest. It's always great to, as you teach, you learn, and it comes back full circle. So we appreciate the opportunity.
Absolutely. And ladies and gentlemen, if you have any deals that sound like they may fit the criteria that we've discussed on this live or any of the other lives, definitely submit them to us. What I'll do is I'll make sure we go through them so they're vetted. We know that this person is on board to sell before we put it in front of Patrick and Steve. That way, when they look at a file, they know for sure, hey, this is going to go somewhere. But definitely submit it to reirev.com. If you haven't already, make sure that you're signed up. The marketplace is live. So take advantage of that opportunity and get yourselves signed up and start submitting the deals and leads there as well.
Hey, we have one encore question from Q. Notice some debts are equal to the amount of the assets. Last BK question. How far back in the records do you go for pursuing? Do you focus on filing date or the discharge date? It kind of doesn't matter. So the bankruptcy can even be over and done with. If the homeowner still owns the property, all bets are off. There may still be a huge opportunity there. If it's during the bankruptcy, that's where the time can be an issue. If it's during the bankruptcy and the trustee has not abandoned the asset from the estate, we can't do anything with it until the trustee says no asset distribution. Then it's free game for everybody. But the older the date is, the odds are something may have happened. Either the homeowner is okay now that with the discharge of their other debts, they can now afford the home, or they could still be in that situation where they can't afford the home. So, Steve, unless you've got any additional data on that, the dates kind of sort of don't really matter.
Right.
I hope that answers your question. Right.
All right, ladies and gentlemen. Huge thank you again, Steve. Thank you so much, Patrick. And I definitely want to coordinate with you and the community, of course, for the extended trainings and workshops. I know that this has been a huge opportunity for me and everybody on these lives. So, again, thank you.
You bet.
Hey,
We'll see you next time.
Absolutely. We definitely got to coordinate something. But, ladies and gentlemen, if you haven't already, invite somebody you think would benefit from being in proximity with us. Subscribe to the YouTube, drop a like on the replay, comment letting us know what you took away from it, and we will catch you in the next one.
all right, thanks,
Peace.
everybody.
Take care.